Hey traders and investors, welcome back to Streetwise Economics. If you are looking for real practical trading updates, not get rich quick hype, you are in the right place. This week, I'm sharing my actual portfolio results, the strategies that I'm using, and the key lessons that I learned as the markets remain volatile and headlines keep people on the edge. Quick disclaimer though, before we dive in, remember this content is for educational purposes only. I'm sharing what I do with my own money, not financial advice. Always do your own due diligence and make decisions that fit your situation. Now, let's start with the portfolio performance and market context. As of May 30th, 2025, my trading account stands at Canadian $32,920.05. That is up 53.23% since inception, with a total profit of Canadian dollars 11,435 dollars 96 cents, and that's a solid return in my view, especially considering that the S&P 500 was actually down 0.74% over the same period. My cash position is strong at 26,797, which gives me the flexibility and latitude as much also as peace of mind in these unpredictable times. While the major indices such as the S&P 500 and QQQ as an example that tracks the top technology companies has had have had a very strong May overall, particularly led by the technology and AI stocks like Nvidia. If you look at the tech stocks, Amazon, today I'm recording this video, it was trading at $209. So this has been something that has been keeping some investors and traders on the edge. But uncertainty still persists, in my view, especially the ongoing tariff discussions and rising geopolitical risks. So let's talk about my trading strategy. I'm basically deploying cash secured puts and capturing overreactions in the market over the short term. My main strategy, like I have continuously used, has been selling cash secured puts on stocks that have dropped sharply, often due to market overreactions or panic selling. But for me, I only do so for stocks that I've done research, I understand, and that I follow. Basically, I'm more like a typical my own analyst in my own view because I understand how these stocks move. And in any case, if I'm assigned, I'm happy to own those particular stocks. For example, it's essentially a cash secured put is, let's say I want to buy, let's say Apple stock at $195 and it's trading at $200. What I do is I open a cash secured put contract, right, with a strike price of $195. So I sell one option contract, which is a put, right, at a strike price of $195, and then let's say I get paid $200, right, with a strike price, let's say for a week. So after a week, if Apple stock closes above 195, I keep the premium. But if it goes to, let's say, 194, I will still keep the premium, but I would be assigned for 190 at 195. Still with that $200, I'll still be fine. But the idea is I want to be on the seller side and manage my risk on the stocks that I've done thorough research on. So this approach lets me collect premium income, and if assigned to buy quality stocks at a discount like I just explained. But recent trades that I've done include puts on a stock with ticker symbols MUR, Murphy Oil Corp, and then LBRT AA, and then ticker name SHOO, and then ACHR and KHC. And that's something that I have mentioned that I am happy to own these stocks because I've done research on them. I also hold core position at the point of recording, at the point of March 30th, Aritzia, and Berkshire Hathaway, and I was managing a long-dated core of Reddit, giving me exposure to the potential upside as of May 30th. Now, the key risk management and lessons that I've learned are that with geopolitical tensions and more talk of tariffs in the US, I am managing risks aggressively. I keep a large cash buffer, so I'm never forced to sell in a panic. Actually, if the market drops, specifically certain stocks that I've researched, I'm so excited because I get to buy them at a discount. I keep this cash buffer so I'm never forced to sell. And this week I was reminded again not to get greedy. So it's tempting to chase every bounce, but discipline and patience win in the long run. I took some profits on positions that ran up, locking in some gains and keeping emotions in check. Another lesson is to focus on the process, not just outcomes. I like to stick to my own plan, manage my risk, and don't let the fear of missing out drive my decisions. Some market insights and outlook include, despite a strong May for the S&P 500 and Nasdaq, volatility remains high, especially with ongoing trade uncertainty and global risks, particularly the Ukraine-Russia conflict. For me, I am a little bit nervous if Putin, as President Trump reportedly mentioned, indeed retaliates, then more likely it's going to cause some volatility. I'm not an expert in this area, but at least my experience has been informing me that if there are those rising geopolitical tensions, wherever it happens in the world, the stock market or the equities market or even the bonds and the currency market in the US or even here in Canada, there is some increased volatility. Now, the best opportunities, from my experience, often come when others are panicking. So I want to stay alert and don't be overextended and, overexcited. So remember, no one can predict the market's next move with certainty, especially if you are looking at the short term. So that's why I stay flexible, keep cash, and focus on strategies that work in all environments. That's something that, interestingly, I have listened to Warren Buffett's, interviews, and when he kept on, mentioning that, and also when I attended to Berkshire Hathaway, one thing that I also learned from Greg Abel was that they usually keep a big chunk of their portfolio in cash through maybe treasury bills to get some interest. But the idea is that usually there is something that can happen, maybe at individual stocks that we understand that might cause a temporary short-term drop, let's say missing earnings, or maybe the market wide or the economy, global or local. I focus in the US. So that's something that I am learning. So in terms of my final thoughts and invitation, if you found this update helpful, make sure you subscribe to Streetwise Economics here on YouTube for more real world trading insights. And if you want to take your trading to a higher level, as well as your investing, consider booking a one-on-one coaching on www.streetwiseeconomics. My group is all about learning, discipline, and practical strategies. No hype, just results. So always trade and invest wisely, and may the markets be on your side. See you in the next week. Bye bye for now.